Good morning, everyone. Greg here, Master Trader. I hope you picked up a little bit of the lessons that I've been sharing with you in some of these videos. We're looking here at the NASDAQ futures. One of the things I mentioned to you yesterday, and I also, with subscribers, always teaching them things along the way with recommendations, was that while you were looking at these converging moving averages here, which are the 20 simple period moving average and the 50 simple period moving average, where they would be a reference point for sellers to take positions in or anticipate a lower high. I pointed out the fact that the move down, right, the big red bar, is a momentum move in this smaller time frame here, which created the price void. Some of you listen to say, well, what's a price void, Greg? Well, it's a concept that I've taught for years, in that, many years ago, going through the same learning process as many of you probably are, trying to figure out why prices move as they do with one setup and not, or sort of similar setup, not as much or not at all. So one of the concepts was, or things that I learned, was that these type of moves like this leave no reference point of, in this case, price resistance and a void. So when you get this type of bottoming action here, and then as prices reach a subjective reference point, which is what we have with those moving averages, right? The moving averages are just lines that you put on their chart. They're not real reference points of resistance, meaning they're not they're not price reference points. So when we look to the left of the moving averages to see is there actual price there, well, on the daily chart you say, well, sure, look at these bars that are overlapping each other. But as we look inside of the bars, we see that there's nothing there, no pivots, no congestion, a void. And now prices are accelerating up into that void. And when they reach this area up here, which they're already at, it's an area. So let's just move the red line, which was resistance, here, up to here. We look at areas of resistance, not exact points. So as prices reach into that point, that's where the sellers are going to show up again. Between here, there was a hesitancy. Here was the chopping around at the subjective reference point. And then this price action right here was the tell that it was going to go up. Because you see here, over here, as it went up and was kind of, erratic, it tightened up over here. This is a picture of certainty. And then it broke out. These are the kind of patterns that you want to trade breakouts from. Tight patterns, not where this pushed up from this dip down and then broke out above the highs. No, that's not a professional entry point for a breakout. This is, and it 90% of the time is going to lead to you making money. So you may want to take a picture of that pattern. Okay, so let's look at the S&Ps. They're up here today, breaking out above this resistance here, but not the kind of pattern like the Qs. You can go back and compare. All right, very different. All right, that is the money. And while this is breaking out, you could have traded it a different way. That being at this resistance area, would have dropped down to a smaller time frame and took a buy setup inside this area here. So now as it comes up into this congestion, right, it's still got room to do that. And let's look over there. It's cleared all of that, and there's nothing to stop it. But when the Qs reach their resistance, that's going to come into play here in the S&Ps. So one of the concepts that we use is relative strength and weakness and intermarket analysis to determine what are the likelihood of prices also moving in one direction or not. Crude oil bouncing here, actually making a higher low at this big support area here, but may probably or make a lower high over here. So not the kind of pattern that I'm looking for, but just an observation of what's going on there. And gold bouncing. And here is an example of an area of support. So while prices could have come down all the way to the bottom of that area, this congestion right there, right? That you mark off the area, not the exact point. And that's the problem with subjective reference points, like an exact point of a moving average, or some that subscribe to using Fibonacci retracement levels and looking at exact points like 0.682 or whatever the numbers they use, and saying, well, that's the line in the sand, or where you have various Fibonacci levels overlapping each other. That's another concept that's supposed to point out to stronger areas of support or resistance. It's all a lot of hocus pocus, folks. Just look to the left, see where there's price congestion or swing high, and that's where the reference point is. Forget about all these lines and trend lines and fib lines and waves and so on. Keep it simple. That's what prices move on. Bonds bouncing off of another area there. So bonds moving up here today. Like, everybody's happy. Earnings are moving up. So what stocks we might look at? Tesla, I pointed out to you yesterday, had a great day. Had a nice 5-minute buy setup early in the morning. There was the pullback there, and consolidated and continued to move up in the latter part of the day. Starbucks, I've been interested in this for a couple of days. Now it's retest of the 200 MA, which is in alignment with some support. Let's go over to the weekly chart. And you see this prior low here. So this had a deep retracement, but here a 200 period moving average, which is subjective, is in alignment with some price support, and buyers are beginning to step up. And it's a counter trend type of setup. It's not even climactic, but as an intraday trade, if it should set up or play out, if it can get through this area right here, well, it opens up the door to what would probably be more of a choppy move, since this has these reference points here. But it's one of the things that I'm looking at to see if it can get going here today. What else? Well, Snap, as you all know, got shellacked, and there's nothing to stop this from going down. So this could be short bait for a lot of intraday traders. That keeps moving lower. And you got PayPal breaking out this morning. It's up here, hit 57. So that's new highs. Square, that moved yesterday, and it's hanging up there. These stocks look great. They should, and it's coming after a consolidation. They should be able to go higher. One of the gappers, it's moving up here this morning on an upgrade, is Grubhub. You can see the gap up here above this congestion, so that could be in play. It has the void, not exactly the same type of a drop as I showed you in the Qs, but still a momentum type of a move. It wasn't a straight down move, so things can happen in different ways. But as you look at the daily chart here, it looks more of a straight down type of a move rather than the overlapping bars that you saw on the Qs. So a lot of little details to looking at these price patterns. Biotechs had that big move a couple of weeks ago, and it's been consolidating. So they made a little bit more time. But something I wanted to show you about why we rarely trade biotech stocks as swing trades or core trades. And this wasn't a pattern that we'd even be interested in because it's too wild and whippy. But the stock is trading down to $5. Right? So to take the risk of trading biotechs, now the great reward when they're working, of course, but they have the potential to be cut in half. And this is down about 30% from yesterday. So those trying to play a counter trend bounce, looking to sell a gap up today, well, they're down 30% on that overnight hold. And those that were buying up here are down 50 or 60%. So be aware of that when you get involved with biotech stocks. And the last piece of advice is beware of the penny stocks. And penny stock traders are the new craze as of late for intraday traders. And if you know what you're doing and you're fast, Nothing wrong with trading these stocks. They have liquidity. But if you get attracted to these and the traders, the chat rooms and such that are trading these, and you're not at the top of your game, it's one of those situations where you could lose 50% of your money, right, quickly as well. So just keep that in mind, if you're thinking of trading these, and trade small, learn how to use your execution system. Don't just jump in there and take a loss, for a situation because you just weren't familiar with a certain type of tradable instrument or strategy. All right, that's it. Have a great trading day, and we'll do an update tomorrow.